Can we have everybody taking your seats, please? Going to start after lunch. I am assuming everybody's had their lunch. We can start. Can we sit down, please? Okay, so welcome back. Good afternoon and welcome back to the afternoon session of Planet Dialogue 2025. Can we have silence, please? Okay, and I welcome back also people who have joined us online. I know we have fewer people than in the morning, but I think the people who are here are committed to a cause and we are very happy to have them with us. So thank you so much for staying on. Uh, I think the panel before lunch, I think raised and talked about certain issues that buyers, registries and assessors have concerns about. I think a lot of work seems to be work in progress. There seems to be a lot of expectations from regulatory bodies and laws and taxation. And I think that's the session that we are going to have now in the afternoon. We are hoping that we will get some issues resolved. I'm sure there'll be some newer issues that will come up, but that's the process of learning. The panel now is ecosystem creation for ease of business, environmental law, policy, and taxation. We were meant to have 4 panelists here, besides the moderator, but one of them, Suruchi Bhadwal from TERI, had to drop out because of ill health. So our apologies for that. But I must warn the other panelists that we have a lawyer in our midst. She's a corporate lawyer. And I've had a conversation with her over tea to say that she's going to moderate the session. She will not interrogate any of the panelists. I've also requested to her that she will be non-partisan. So she will not take sides, unlike a lawyer. And I am also giving you the assurance that whatever the panelists say, it won't be held against them in the future. They might be quoted, but so I hope the rules of the game are set. So let me start by introducing Niti Paul to you, who's going to moderate. Niti Paul is a partner at Luthra Luthra. You want to join us here? She's a partner at Luthra Luthra Law Offices India, specializing in corporate law and merger and acquisitions. Interestingly, it was written earlier, merger and accusations. We've corrected that since. She advises domestic and international clients across sectors like renewable energy, manufacturing, hospitality, and finance. Niti has deep expertise in joint ventures, restructuring, foreign investments, and of course, ESG, especially carbon markets. So yeah, she has guided clients on both domestic and international carbon market transactions, including the sale and purchase of verified emission reductions. I'm told they're called VERs, and future trading, while also addressing regulatory concerns. So I am hoping some of them will get addressed during our conversation today. She serves on a working group under the Ministry of New and Renewable Energy and the Indo-German Energy Forum for agri-photovoltaic projects. Recognized by Legal Era and Forbes India, she holds an LLB from Delhi University. Welcome. Thanks, Joe. Okay, and now interesting list of panelists. We have first with us Dr. J.V. Sharma, Senior Director, Land Resources Division, TERI. Sir, will you join us here? Dr. Sharma, with a doctorate in Economic Valuation of Forest Ecosystems. It can't get better than this for a session. He has a doctorate in Economic Valuation of Forest Ecosystems, brings nearly 40 years of experience in forestry, starting his career actually in the Indian Forest Services. In 1983, he retired as Principal Chief Conservator of Forest, UP. At TERI, he has led projects on climate financing, forest governance, carbon financing, and improving forest communities' livelihoods. I think something that has been spoken about a lot during the course of the morning. Dr. Sharma has also represented India in international negotiations, authored research papers, and guided PhD students on forestry and climate change at the TERI School of Advanced Studies. So welcome, Dr. Sharma. Thanks for joining us. We have amidst us another Sharma, Mr. Adarsh Sharma. He is chartered accountant and carbon tax expert, the Adarsh Sharma and Company. I think he has been helping us with a lot of our carbon related projects for a long time, and it's always insightful to hear from him on what the newest, taxation policies and issues are. So thanks for joining us, Mr. Sharma. He's a certified valuer with the Institute of Chartered Accountants of India, leads a chartered accountancy firm based in New Delhi. With over 25 years of experience, he specializes in Indian and international tax laws, corporate law, and trade policy. His expertise spans joint ventures, audits, fund syndication, and startup compliance. He has spoken at numerous professional seminars in India and abroad and contributed to core groups in policy, corporate, and industry associations. Mr. Sharma advises leading corporates at the strategic level and serves as an independent board member, contributing to decision making in prominent Indian companies. Welcome, Mr. Sharma. And we have with us Mr. Rohit Kumar. Mr. Rohit Kumar is a Secretary General at Carbon Markets Association of India. He brings over 20 years of experience in sustainability, carbon markets, and SDG implementation. Very critical, I think, to the conversation that we are going to have in the afternoon. He has led grassroots initiatives, policy work, and communications, interestingly. So that's very good to know. And was instrumental in campaigns like Swachh Bharat. Formerly associated with the Chambers of Commerce, he organized initiatives like Swachh Bharat campaign. He's been recognized by the President, the Vice President of India, and the United Nations for his various sustainability initiatives. Rohit Kumar is a leader in B2B, B2C, and B2G initiatives. Twice featured in the Limca Book of Records for Green Drives. That's very interesting. He's been recognized by Indian leaders and the UN. He holds a BSc in statistics and a PGDBM in marketing. So welcome, Mr. Rohit Kumar. So between a Limca Book of Records holder and a lawyer, let's take the conversation forward. Thank you.
Good. So thank you, Sudhir, for those introductions, glowing ones, I might add. Before I think we start the session, I would just like to make a disclaimer. Sudhir has said we're going to find the answers to many of the challenges and the issues. I think while we don't assure that, we assure you that we are going to discuss the questions at length and considerable length. Hopefully, we will find solutions to most of them today and address them. So thank you very much, Cognisphere and Mr. Acharya, for enabling this dialogue on some of the pressing issues and challenges that face the sector today. From the legal and regulatory perspective, there are enough and many issues, some and mostly due to lack of there being a legal and regulatory framework that adequately and appropriately addresses the carbon markets. So going straight to the questions, first one to Dr. Sharma. What are some of the policy level and regulatory changes that in your view would help and facilitate implementation of these projects at the ground level? I know it's very wide, but feel free to.
As far as carbon market is concerned, government does not have. It is not working. It's working. Yes. At present, carbon market is concerned, so government does not have much of the policy and regulatory regime at present. And you all might have seen the notification of the green credit. Green credit is not the carbon credit. I was also part of the technical core committee, and then I suggested to the Secretary Environment and Forest, then what is the difference between 1 ton of carbon dioxide and one carbon credit? So that she mentioned now secretary is he, at that time she. That from somewhere else, very important office, this concept of the green credit came, so we can't change it. No problem, no problem. Ah, so that and one aspect has been written in the notification of the green credit, that if you are obtaining the advantage of the green credit, you can also obtain advantage of the carbon credit also. So that is very important aspect of the notification issued by the government of India. That is one. My question is to the government that, of course, government representative is not in this hall in this meeting. So that who will buy the green credit? Government lack policy and regulatory regime that for creating a market at the domestic level for offsetting emissions, etc. Of course, some of the policy decision has been taken as far as ESG is concerned, but as far as offsetting their being a carbon neutral, and India is also taken, Prime Minister has announced 2070, India will be the carbon neutral, and who has seen the 2070. But at present, you might all be knowing that at Paris Agreement, it was agreed to limit the rise of temperature within 2 degrees by 2100 and aspire to limit 1.5 by 2100. And we are in 2025, 1.55 degrees has already been risen. And that has been spelled out in one of the forum sustainable WSDS, what some sustainable development and the IPCC chairperson. He spelled out the 1.55%. So that when we see that that is a serious issue, that what we are going to pass on to our generations. So we are passing on to the wealth, we are passing on to what kind of the temperature rise we are passing on to the our generation, that we have to see aspire to limit 1.5 by 2100. We are in 2025. So we are seeing the impact. That is a impact. That is why government of India, or most of the corporate in the country have taken the decision that we will be carbon neutral, some by 2040, some by 2030, some by 2050. But we are implementing 40 carbon finance project in this country, in the country, and we are seeing many corporates are approaching us, and we are asking them then how much tree plantation you like to do. Well, 50 million, 10 million, 5 million, when where you will plant, on your head or my head? Where is the land available? Land available in this country only with the two, either with the farmers or with the state forest departments, degraded forest. There is no other third land where you can plant tree. You can start planting in the urban areas, see the cost of the land, etc. Nobody will allow you to plant trees. So I am coming to the point that government of India should come up, must come up with the policy and regulatory regime for the corporates and industries, when those who have taken decision for the carbon neutrality, that they have to offset their emissions through nature-based solutions. Only then the farmer of this country and the forest dependent communities will be obtaining advantage of the carbon finance. And I like to mention particularly, and most of you might not be knowing, or some of you might be knowing, that how the wood and wood products demand of this country is mad. Is anybody can answer that? How much? More than 80% wood and wood products demand came from the met from the farmer's field, agroforestry. Only 6% from the natural forest and 12 to 13% from the import. And that to be import is more to the extent of 60,000 crore INR. So that government of India plus part is that in 2014 came up with the agroforestry policy. Definitely agroforestry policy is helping, but helping to some extent, not to large extent. But we have to do much larger effort, and government has to do what is the that minimum support price for the farmer, and also the additional income in form of the carbon finance. And in 6 states we are implementing, and first state is Punjab in the two projects. We are supposed to pass on of the first monitoring cycle, 45 crore to 3,600 farmers. And I am happy to inform you all that 13 crore we have already passed on to the farmers. And there are challenges, lot more challenges. Nobody can see, you cannot see he is progressing, you cannot see he is progressing. So that kind of the media has come up. They are not supporting the farmer. Farmer is not knowing that how the uh, carbon finance mechanism is. We are helping them. They do not know the technical nitty gritty. They know that how much money we will get through the plantation activity we have done. So timber, how much money from the timber value or how much money from the carbon finance. So that is one of the very important aspects, so that we can double the income, maybe triple the income of the um, farmer. And when Punjab Chief Minister has distributed the money ceremony in a ceremony, and one farmer, just we have passed on 20% of the total eligible money to that particular farmer, that was a more than 10 lakh. Then he mentioned that ऐसी पता ही नहीं कि कैसे मेरे अकाउंट में अचानक कहाँ से पैसा आ गया. That there was a direct benefit transfer. So that in other projects we are finding lot more challenges. So in the previous panel discussion, there was a discussion that international standards are there. They have the methodologies global level, and it is very, very difficult to match our national domestic context with them. And the auditors and the reviewers are from the Europe and US and other countries. They do not know the nitty-gritty of that, and there is sometimes valid objections, sometimes irrelevant objections, so that we have to give that. There's a lot more to and fro, this and that. So for that, domestic registries are very, very important, and domestic registries only can survive when the domestic market has been created, and the market has only been created when the policy and regulatory. Why CSR fund is being spent by the many companies? Because regulatory regime is there. So that is why that kind of the regulatory regime we have suggested many times. So that this is a gap. This is a big gap that government should have come up and with the regulatory regime to bind corporate to offset their emissions for what they have taken the carbon neutrality target, and offset maybe some percentage, largely through NBS. When largely through NBS means they will be contributing not only for the mitigating climate change, they will also be contributing towards the achieving sustainable development goal. Chunki when you will be helping farmer, forest dependent communities, definitely lot more sustainable SDGs are also met. So that these are the, I'm just summarizing that gaps are there, and those gaps have to be filled by the only by the government.
Thank you. Thank you, Dr. Sharma, for expanding and elaborating on the lacuna as far as the framework is concerned. And I am not sure if, I understand there may not be any presence or participation by the government in this forum, but we hear you that some of these offset obligations, they have to be driven by regulations, and a larger number of corporates need to be brought into the obligatory
Yes, yes.
system in order for these markets to expand and propagate further. So moving on to the next issue, I think as a project proponent and as a lawyer, what is the largest, the biggest issue that we always face? It drives the structure, it drives transactions, it makes or breaks transactions. To my mind, what comes foremost is tax issues and taxability in projects. So my next question is for Mr. Adarsh Sharma. In the carbon project structures, as we know, what are the tax implications on the various stakeholders? Let's start with indirect tax implications on the farmers, on the project proponent and on the buyer. And we'll come to the direct tax implications at a later stage during the discussion.
Yeah, thank you. Yes, taxation is always an intriguing issue. It is a complex matter. It is a matter where I think beyond the government, people are entitled to their own interpretations and working around it. So that's a generic statement that I'd want to make because most complexities are basically in the mind of the user of taxation policies of the country. I will address the questions the way you asked me to, which is first the indirect taxation, where it is actually the GST right now, which is the prevailing taxation on the structure. And I'm only going to be addressing it from a perspective of the carbon credits from nature-based solutions, because there is a distinct paradigm difference, because there is a issue that will come up when I sort of discuss very briefly on the direct taxation, where it's largely construed to be basically an energy tax and not basically a nature-based taxation, nature-based solution product taxation. So I'll just address it only from the perspective of carbon credits and carbon credits from nature-based solutions. Now, typically, who are the parties actually in the entire structure and how's the construct of the transition? The construct of the transition is that there's an investor who's actually also the ultimate beneficiary of the final product called the carbon credits, or technically called the verified emission rights. He invests in a project. There are a few consultants in the interim, or he may directly also invest with the farmers. There's no bar on that aspect of it. And the final product that comes is basically coming in from the farmer or from the field, as we call it. Now, is there a taxation on it? Well, if you see, effectively the GST notification that came in first, and it prevails to date, basically actually specifies the word carbon credit as a good. Goods means goods as in the goods, and it is not basically a scrape or an actionable claim. It is called an actionable claim, but it is in the category of goods. Now, the goods have been classified in the initial notification as under the head. It is called serial 8, and it is under the head energy. Effectively, carbon credits were actually meant to be, and I was having a conversation over lunch. Effectively, it is construed as such that it was actually out of the renewable part of the energy, solar, hydro, etc., etc. And therefore, carbon credits was classified then as goods in the category of energy. Now, effectively, colloquially speaking, there's no direct correlation between farmers and energy per se. Though, of course, they contribute a huge amount of energy in the dynamism of the economy per se. But otherwise, effectively, as categorized in the energy, it is so there. But it stays still as that. And carbon credits as goods are now classified under a head called 4907 in a GST structures, and are taxable prevailingly at a rate after 2021 of 18%. Prior to that, it was 12%. Now it is 18%. Now that's where the GST taxation comes in. Now, are the farmers actually required to pay? Yes, if it is a good, they are actually having what is called baseline exemption, which is called the threshold exemption at 40 lakhs. And if they generate carbon credits of a value which is more than 40 lakhs, they're required to pay GST. They're required to register themselves under GST because it is under a forward charge mechanism. So they will have to register themselves. If it is above 40 lakhs, they'll have to pay 18% on that. That is the extant provisions of the law. There is no ambiguity on it. And that is where it stands in the structure. Now, whether the farmers will pay or not, or whether, as for example, our honorable finance minister in this budget also actually spelled out a line. Of course, nothing has come out of it as yet. But there was something to come up on the carbon credit structures on nature-based solutions. Now, whether it will and how it will, your guess is as good as mine. But my present structure is that there's an 18% GST. Now, if, for example, a farmer generates carbon credits of more than 40 lakhs, well, there is a charge of 18%. Now, on that 18%, well, as it stands, the investor basically is entitled to get an input credit. So it is tax or revenue neutral, as you said, tax neutral effectively. He charges it, you pay to him, you actually claim an input credit, and you go on. You continue with your products, and it is basically whatever you do with it, carbon credit, you might take an offset, you might trade in it or whatever. Now, this is where the structure is as of now. The challenges are the carbon credits basically becomes intriguing because there's a procedural aspect to it. The structure is that the carbon credits basically have to be credited to a registry. Now the registry is in India. Very good, excellent. Uh, well, it gets registered in the name, let's say, of the farmer, or if not in the farmer, he can assign it to you. If he assigns it to you, there's still a GST on it at the end of the day. It goes into your account, you get your input credit, and you can avail the input credit. Now, if it is an export, of course, goods are being exported. Exports basically are basically effectively zero rated. They're not exempt, but they're called zero rated tax structures. So there's no taxation in the export of carbon credit. The farmer can directly assign it to the party outside of India, and effectively there'll be no taxation on it. So on the GST, I think there is not much of a flux. Yes, there is a flux. Now, where does it come in, and where does the added cost come in? The added cost is carbon credit is actually a product of what is called afforestation, agricultural product, or otherwise. I'm just getting into detail. You can just stop me, if I'm actually impeding on it. But just because you asked me to elaborate, I'll take another 5 minutes and finish GST. Now, you can actually, when you get into that, you either have a consultant or the corporate can by themselves actually get into the processes of what is called the agricultural activities. Now, agricultural activities that they sort of go ahead with are actually exempt. They're exempt by a specific notification under the GST. And that notification actually basically is in a subhead called Agri Support Services or Agri Extension Services. You tend to basically help the farmers with their inputs in terms of, let's say, giving them saplings, their pesticides, their irrigation, the other support services that there are. All of them are exempt. Now, when you render all of that to them at the end of the day, that particular agri extension or agri support services are exempt under the under a specified notification under GST. It's a notification called 12/2017. I'm not getting into the details of the heads or otherwise, and they're exempt. Now, what happens is when you actually exempt a particular structure, naturally, when you actually have the inputs of that particular uh, platform, which is, let's say, you buy some saplings. Now, saplings, open structures, no taxation. If they come in pots, there's a 5% taxation. Now, if there's a 5% taxation in pots and saplings, at the end of the day, you don't get an input because ultimately your sub-services on agriculture are exempt. So there's no input actually on that particular structure. That adds to your cost. So there's a GST element that gets added to the cost per se because the value chain of basically availing input tax credit is broken at this particular level. Now, that's an additional cost because of this particular structure. Correct or wrong, good or bad, I'm not getting into it right now. Effectively, it's about mathematics and it's about Excel sheet calculations. The accountants here can probably do that on that structure. Now, that gets added to the cost. That's one part of it. The second part of it is that there is, at the end of the day, you tend to actually give all of this virtually free to the farmer. The farmer basically has this as no input cost. Now, since there's no input cost, the farmer generates carbon credits. The carbon credits actually effectively then, and I'm now actually transcending or sort of moving or transiting to, not transcending, but transiting to income tax also. Farmer actually then basically generates the carbon credits and actually gives it back to the same investor who's actually invested in that structure. And his entire carbon credit income, or effectively there's no income for him. Effectively, he's gotten all of the inputs as zero. And it's the value of the input that he's got that actually works to be the transactional value. And I'm using the word transaction value because the transactional value is a critical aspect in GST because you are taxed at the transaction value. So if he gets, let's say, 100 rupees of an input from you, he actually sort of sells you the carbon credits at 100 rupees. So for him on this structure, effectively, the income is the input that you've actually supplied to him, which is the 100 rupees. When he supplies it to you at 100, on that transactional value of 100, there is a GST on it. Now, there's an 18% GST, and on the final value that he supplies it to you, that is the input that you've given. Incidentally, you've given him the input, but he is required to pay a income tax on it. It is under a section called Section 115BBG, and is required to pay right now presently 10%. Now it's a matter of a gray or a bit of a debate, so to say, right now, that that particular section came in because of the energy part of it and not something else. The nature-based solution is not that aspect of it. That's something I won't get into it, because right now that's the sole section in the statute that is there, and there is no bifurcation. Though of course, yes, you could probably say that the historical empirical structure or the preamble to that was energy. Now they'll pay 10%. Now, how does the farmer pay 10%? Well, he says, I'm used to basically being the sweet boy of the government of India. There's agricultural income has always been exempt under the basic definition of agriculture. In fact, one of the first sections in our income tax is a section called 21A, and 21A is one of the first sections. Basically, it makes agricultural income exempt under the tax. So he says, I'm not used to this kind of a structure. Well, you're requiring me to pay 10%. Well, the government is thinking about structures that it will probably be, a TDS when they charge on it, or a reverse charge platform that is there. It will come up as TDS or TCS at the end of the day. And therefore, the farmer will not actually be asked to get into those procedural nuances, niceties, and the complexities, as they call it. It'll be very hard and difficult to sort of educate him on that also. And also on the GST, perhaps it will also be working towards the RCM. I think I've answered your questions, given some perspective to it, made it complex, made it, I think, perhaps more confusing for everybody here.
Thank you. I think you've answered it very, very adequately. So thank you for that. We will throw, the questions open to the audience, and I'm sure they have lots of follow-up questions. Before we, do that, want to understand a little more about how do the compliance market and the BCM, how can they really intersect? That's a question to Rohit. And please, what are the points of integration?
So thank you, Cognizpair, for inviting me to the program. So we are from Carbon Markets Association of India. So we closely work with all the two key ministries, Ministry of Environment, Forest, Climate Change, and Ministry of Power. So we are in the stage that I will just go for a positive point as a country, what we have. We have around 17% global population, only 4% emission, and per capita is around 2.5 to between 2.5 to 2.3. And but the challenges are ahead, that we are aiming to be a developed country by 2047, and large emissions is happening. We are doing large infrastructure development as a developed nation going ahead. But at the same time, we have three kind of carbon markets right now. One is that compliance carbon market run by Bureau of Energy, backed by MOP and MOFCC. And second market, we have voluntary carbon market. Now we have two type of voluntary carbon market. One is that international voluntary carbon market, and second is that voluntary carbon market, which is offset carbon market run by Government of India. And Government of India has already launched 10 sectors where we can list and register the project. So it's a great development in the Government of India side. We are waiting for this from last so many years. Recently, last month, 2 days back, Government of India has also announced the target for certain sectors in the compliance market. The 9 sectors are in the compliance market. 4 sector target has been released. And the sectors are like cement, chloralkali, aluminium, pulp and paper. So all this target has announced. So now we are in the right shape and right direction. That as a country, we have aiming for 2017 net zero goal. So we have decided at which path we have to go and which other sector where we have to target in the stage 1, stage 2, stage 3. So we realize that things are in the very right way. And for this, we would like to recognize and appreciate the government initiatives, because we are a very large country per se. We are not like a small island and some European nations where our challenges are not ahead, like India has as a world largest democracy and populated country. At the same time, I would like to mention that carbon market, India has already taken a great leadership earlier. So we know that starting from Kyoto Protocol in the CDM era, India has 17% projects in the CDM projects, and we are able to generate approx $10 billion to country. And that money has gone to all the stakeholders who has participated in the market. That definitely going to help country at large. But all these monies are not a huge money, because we need $10 trillion as a country to achieve net zero. At the same time, we are very happy that Article 6 market has finalized in the last COP29. And we are aiming that all those 14 technology lists which government has announced 2 to 3 years back is going to have some clarity, because this is only a list right now. So we have requested government that to share which other project will come under each and every 14 technology list. So today the topic is really interesting, that about NBS we are talking. So before that, I was in the MOFCC wetland management meeting. So we were discussing that how nature-based projects can actually get carbon funding to the farmer. The challenge is ahead that we need enough funding in the stage one for awareness, for data collections, and where the government has to be a partner. Without government, it is very extremely difficult to handle the project and get the project done, because we need GIS technology. We need certain rules and regulation to maintain the wetland project as a Ramsar policy development happen in Iran. So without government, we can't do a large number of projects. Similarly, we really appreciate that MP government has recently announced a carbon market policy for Red Plus project, where three partners are there, where MP government is one partner, and the community is another partner who is going to plant the tree. And also, they're inviting the investors who can invest the fund, and the carbon credit, they can avail the carbon credit. While there's some clarity is required, because it is also mentioned that CSR fund can also be utilized. So that confusion and clarities are there. So I'm sure that if we'll have a proper dialogue, we can able to meet the right solution. But idea is that we need to act fast. So that part we are missing as a country, because we have humongous opportunity and large number of investors looking forward India as a destination, not China and Turkey. And we have great trust. We have already leader in the voluntary carbon market space, as you mentioned, that how voluntary compliance market can be intersect each other, help each other. So in the voluntary carbon market, we have around 30% share globally. But our challenge is that most of the projects, around 90% projects are in the renewable energy side we have. Only 10% community-based projects, while NBS is almost negligible as a country. While Brazil has different kind of story where bioenergy and NBS projects are very large. While all the renewable energy projects, carbon price has actually fall drastically last month. I think ICVCM mentioned that CCP leveling, and that really create a big problem for developing country and least developed country, where renewable energy projects are getting a carbon credit funding. So our price has declined around between $2 to $5 earlier the price. Now it is around 50 cents to 70 cents. So that, but largely that when we raise this to government and institutions, so that was in the VCM side. So I think we're not able to get enough support in that sense, because there's a private body in ICVCM, VCMAI mentioning it, leveling the credit, and buyers are rejecting those credits. So as that side, we thought that VCM credit should also be, or VCM markets was also backed by government, because finally VCM is helping nation to create a path to achieve net zero goal. In the country like Singapore and the country like Korea, where voluntary carbon market credit is also going to use for compliance side at certain percentage. So I'm sure we are raising this to government, that government of India has launched offset carbon market recently. And also compliance carbon market is going to launch, also already launched. I think sector target has already decided. But how offset market credit can also be used at certain percentage, around 10 to 15% for compliance side, so that offset market can grow much faster. While there's another confusion, what we got in the offset market launch, that mangroves, blue carbon is also part of Indian government offset market. And also it is well established in the voluntary carbon market. So as an investor, where I have to invest, which kind of project I should register? I should register for offset market, I should register for international voluntary carbon market. Because I'm not sure that government of India may announce after 10 years time that mangroves can also be a compliance carbon credit. So investor is really concerned that to invest, because all these projects are 20 years break-even or ROI. So these are the confusion existing in the market. But I'm sure that world is looking forward a right destination to invest. We have around 7,500 coastal areas, but we just need to come with the right policy framework and also able to capitalize. Because when we go for an investor meet, we do investor meet every state. Why not we can do the investor meet in the carbon credit generation side? Because we have enough opportunity to generate fund as a country, as being one of the best biodiversity hub on the planet.
Thank you. Thank you. As you mentioned, a possible fallout, and this is currently, I think, just in theory, that we envisage that the Article 6 market may intersect with the VCM. And in our project agreements, we do provide for the possibility of, say, the government of the host country subsuming the credits that are being generated in the host country towards its NDCs. How realistic do you think this threat is? I mean, you mentioned, and what can we do to strengthen the rights of an investor under the contract? I think we do provide for corresponding adjustment, but I think that's a question to, oh, right, sure. Yeah, please, go ahead.
2.5 to 3 billion tons of the equivalent carbon dioxide additional from the additional forest and tree plantations, afforestation and tree plantation. Very simple English. 2 times additional word have been used. When 8 NDCs are being announced and communicated to UNFCCC by Government of India, in this NDC, no baseline was given. And as a layman, the baseline should be 2015 when while we are communicated targets to the UNFCCC 2015. Forest Survey of India have done the scientific research and projected how much Government of India is going to achieve by 2030. It was by 2030. So that they have given 3 scenarios. One scenario is that if the baseline is 2015 and over and above business as usual, then India will never achieve this target and will be deficit by 1.5 billion or around that kind of figure. If India is using 2005 as a baseline, then India will be overachieving by 1.25 billion tons of the equivalent. This is on paper only. This is no additional plantation, no. And Government of India, forestry is a concurrent subject of the Indian Constitution. Government of India is only policy and planning. Implementation lies with the state government. And 2015 to after 10 years, we are in 2025. Government of India has not yet distributed targets to the state governments. Then how you will be achieving, how you will be. So that is a only paper work. And in 2021, Government of India has taken a decision that baseline should be 2005. And then I also can proudly say that India will be achieving 1.25 billion, overachieving target with that. No additional plantation, no additional, as everything is business usual. So this is a kind of the climate change contribution by the, not only by India, by many countries, by all. That is why temperature has risen already 1.55 degree, what we have expected in 2001, 180. So that is a reality. So now I say that when with the involvement of the farmers, because more than 80% wood and wood products came from the farmer. So that is why carbon sequestration also from the effort of the farmer. So as far as many countries raise this question, then how India will be selling the carbon credits while after achieving that. Then that is a technical report. Everybody can see that is on the website of the Forest Survey of India, that at least 1.25 billion carbon credits we can sell by 2030. I'm not saying beyond that. So that kind of the benefit, that is it should be the effort of all of us, that this benefit should go to the forest dependent communities and farmers of this country. And you will be surprised to know that in India, more than 400 million means 40 crore, they live in and around forest. They derive full and partial livelihood from the forest. And India's forests, in India, there is no issue of the deforestation. Every media person says that the deforestation, no deforestation, but there is a degradation. Degradation due to the over dependence. There is a fire, there is a overgrazing, there is a fuel wood extraction. So what we can say that we have implemented Ujjwala scheme of that, etc. But still, report of the Forest Survey of India says that 400 million tons of the fuel wood has been extracted from the forest of this country. use. So likewise, these are the realities. So we have to come up from the realities, and one of the reality is that we should help farmers. We should help forest-dependent communities by providing. And Rohit has mentioned regarding the price and all. We have sold the carbon credit of the eucalyptus and poplar only in the rate of $15 per credit. That is a reality. 45 crore. I mentioned that that is in our account. Money is in our account, and we are transferring direct to the farmers. Number two, price of the credit depends upon two aspects: integrity of the credit, quality of the credit. And how it comes to the quality of the credit, how many sustainable development goals are there, how many ecosystem services are there. And mangrove, he has mentioned that. And mangrove, you bring the credit from the issued by the credible standard, then we can sold it in a $50 to $100 per credit. These are the rates I'm telling you. And people are after that, kindly give us the mangrove credit. And all investors are ready to invest money for the tree plantation of the mangrove. They like to invest money for the plantation activity, not only that the transaction cost is in an additional part. So these are the aspects, and we all are sitting to help the country. We all are sitting had to mitigate the climate change, to limit the further rise of the temperature. 1.5 I already risen, further rise of the temperature. So that we should assist government to come up the right kind of the policies. For that, I have worked more than 35 years with the government. I am working with the non-government. I have seen government also, non-government also. The right way is to write research papers. Right way is to that proceedings of this conference must go to the government. Whether they read it or not, forget about that. But write news articles, use media for that. Then media news article will be read by the politicians, will be read by the bureaucrats. Definitely there will be an impact on the policy change. So this is one of the mechanism we are using from TERI. We are using this mechanism, and you also might be using this mechanism. So that I suggest this is one of the mechanism. Without involving government, we can influence the policy changes and policy requirements. Thank you.
Thank you for that. I think you've addressed my next question, which was how do we really engage with the government to bring about some of the policy changes that the panel has recommended. So thank you for that. I think we've given a pause, and some of the indirect tax would have been assimilated by the audience. So we'll move back to the questions on the direct tax implications on each of the project participant. That's for Mr. Sharma.
Thank you. So I actually briefly delved into the direct tax part in my earlier reply also. But direct tax is very simple. In fact, let me just say this: while this particular sector of carbon credits from nature-based solutions is an evolving sector per se, the taxation is also somewhat evolving. Having said that, to me, I think the government has, and to their credit, mapped the nuances of the credit at the initial phase. In fact, our carbon credit tax policy right now is up there in terms of what it is globally also. It is not that it isn't there. Yes, there are clarifications required. And as I said clearly, more clarifications are required because of the interpretations that we do ourselves in the entire matter. To me, I guess the law is somewhat clear. In the taxation part of it, the farmer actually in nature-based solution produces the credit. The income that he gets, either he gets the income by virtue of billing. For example, you say that you leave a particular share of the carbon credit with the farmer. Let's say you say 20% is his share and 80% is something that you will get out of the entire project. It is quite evident that he will definitely go ahead and sell that 20%. When he sells it, he gets a price for it. The price that he gets actually is going to be uh, presently taxed at 10%. Now, there is a slight complexity to it because the present structure or a covenant in section 115 BBG in income tax says that these are to be carbon credits approved under what is called the UNFCCC framework. Therefore, whether the private gold standard structures actually sort of can get into it or not is something that is right now hazy. A lot of people have actually sort of, filed their tax returns basis this 10%. Some of them actually, who are more ingenuous, have actually gone back to an old judgment that existed in income tax, which said that carbon credits are capital receipts and therefore they are not taxable and are outside the purview of income tax. So that's the first judgment that came out in India. Effectively, it is only later that basically in 2018 that the government came up with this 115 BBG. It is effective 1/4/2018. That actually it came into structure that it will be a revenue receipt and therefore taxable. So some of them are still saying that, all right, if it is not UNFCC, since there's no other section in the statute, well, let's take that as a capital receipt. Now, that's not so the case. Of course, if it is not UNFCC, it automatically implies that this is a taxable income, and it is a taxable income out of a good, and therefore, if it is not UNFCC, it will be taxable at the highest rate or marginal rate of basically the farmer. And in the case of a farmer being individual, if he's beyond the threshold levels of his individual income taxation, quite clearly it will be taxed as per his slab. Let's say he gets carbon credit income of more than 1 crore. Well, his tax slab would be something closer to about 39% because there's a surcharge on income and there's a education cess and so on and so forth. As I said clearly, government is appraised of. There are some discussions going on, which basically sort of say that this taxation will not be in the hand of the farmers. It will ultimately be done by virtue of a TCS or a TDS structure, whatever the government will conceptualize, by the person who's actually going to be receiving the carbon credits as a sale from the farmer to them. Now, if the farmer now today credits it in income tax, and I'm now coming to a very complex structure, and I think it's relevant to some people here in the audience. No, in 115 BBG, it's mentioned clearly that the income is on the prevailing carbon value. So if, for example, you've given an advance today of, let's say, 1 crore, and the carbon credit gets generated 4 years down the line, there wasn't a product when you gave an advance. And if you felt that that 1 crore of that money was basically the amount at which it will be taxed, well, sorry, the Income Tax Act is very clear in its explanation that it will be at the prevailing market rate because the product was not even in the womb when you gave the advance. It basically got produced 4 years later when it actually, and the carbon credits get generated and is basically a verified emission rights when it is credited to a registry. That's the date on which basically a product called carbon credit or a good called carbon credit basically gets generated. Now, if that is so the case, it is the then prevailing rate would mean that the farmer might even have to pay tax more than the amount that you've given to him as its input cost, which you felt was the free input cost and therefore the transactional value. It might hold in GST that it is a transactional value of that particular structure. But in income tax, the deemed value of income tax would be on the prevailing market rate price multiplied by 10% if it is a UNFCCC framework platform. If it is not a UNFCCC framework platform, it will be the highest marginal rate multiplied at the rate of carbon credits on that prevailing date on which the registry got hit and the farmer sold it to you. Or he transferred it from his registry to your registry, or he assigned it to you on that particular date. So on income tax, there are two complex issues. One, the UNFCCC part, I think and government would do well to basically sort of to address that at an early date so that that gets somewhat clear and done. And also the fact on the prevailing market rate, because you don't know, you don't know, you're pretty much not sure as to whether you can actually contractually sign a specified number of carbon credits on the date when you actually sign the contract, because carbon credits may be 10% lower or 20% higher or 30% lower or 12% higher. One doesn't know actually. It's a there are a lot of things based, and it's a nature-based platform, and nature can can go or either ways. And if it does, in that eventuality, you don't know that. One, two, you also don't know what the prevailing rate would then be. And prevailing rate would be this is something that's still not come up in India as the CCTS platforms or otherwise, I would not know. Or whether it would be taken as basically a contractual rate of an international platform or otherwise. So these are fuzzy things in taxation, and I think it's worthwhile actually uh, trying to sort of address that by the government. I'm sure they will do that sooner than later.
Thank you. Just wondering that, I mean, since you've highlighted some of the risks of the jurisprudence evolving around that in the future, can one accelerate the jurisprudence? And is you have any experience? And there are some stakeholders here who may be interested to know. Is it better to go for advanced rulings and get this clarity now, or wait and see how this progresses and work with the government in the meantime to formulate policies?
So advanced ruling is definitely a potent tool. There's no doubt about it. And it is meant for basically removing the obfuscations that there are in the system. Definitely, it's an evolving paradigm. It also sort of, churns the brains at the government levels to basically address issues and definitely brings in a lot of certainty. There's no denying the fact that you should. But at the end of the day, advanced rulings to me at times are misused because you basically ask certain specific questions that are centric to certain personal structures or otherwise and try and get that particular structures. Let me just say this today in advanced ruling that since we do a lot of them, basically the department is pretty ingenuous to look through them. And they basically address it in the spirit of the preamble of the statute that is laid out. So, be sure of what the questions are because they will address that specific question. Advanced ruling doesn't go beyond. They will never go beyond what you've asked. Yes, the basic structure in a very succinct way is that advanced ruling is a very good tool. You must get that cleared. If it is cleared, then of course your tax certainty comes into play and it makes the business more effective, and the contractual structures between the project proponents and the investors basically get clarified to that extent.
Thank you. So I think that does clarify a few issues on the tax front. I think we're nearly done with the time. I would like to end on a good note, and therefore I think a question to Rohit, which is really, what do you see as the future of the VCM in India a couple of years from now? How do you see this evolving, what it is today and what it's going to be a couple of years hence?
Can I just ask a question of Rohit also because he is taking a benefit here. The structure of VCM at the end of the day, Google is replete with statements from the senior ministers, largely power sector and otherwise, that VCM credits will not be permitted to be exported. Where are we on that? Because there are you just actually do a Google page, you'll probably find 50 articles and 50 press statements of various senior authorities of the government. Is it, and there's no clarification subsequent there too. Now, yes, sir. So there's no notification, there's nothing on that aspect of it. Where would the VCM then stand if, for example, VCM has to evolve as a great export product?
I'll just the questions for the question. So I'd like to give some highlight about Indian carbon market VCM story, because I think a few years back in the parliament, our power minister had mentioned that we can't export the credit outside India. So after that, the Indian carbon market fall down drastically. So actually, he was mentioning about Indian carbon market, not actually the voluntary carbon market. So we have seen the market growth, and we also seen the market fall as an industry body, because we regularly interact with investors and industry players. What we realized that since this is just an assumption that India was leading that stage, and after that, some of the leading global media has started to publish the story that Indian carbon market is stopped. So India is not going to export the credit, and our carbon market price has fallen down. We raised this question to the government that what is the meaning of the statement in the parliament. Government has said that they never mentioned about VCM credit, they will stop outside India, especially the international voluntary carbon market. Now, all this initiative, all this development, now the clarity has come very clear dimensions. We can see that now we have only three kind of market. One is as compliance only for NDC. We are fixing targets, specific sectors. We are also keeping in mind CBAM is coming. So we are closely working on steel, cement, fertilizer, paper pulp, because we should be eligible to be fight the global trade war. Second market is Indian government market is offset market. But offset market, Indian government voluntary market, we can't trade it outside India. And government has also mentioned 10 sectors. But it depends upon the company who will invest or will register the project in Indian government offset market or international voluntary carbon market. We have to see that where we are getting better price. We have to see that where our projects can be more viable. So it is up to us. But it is very clear that international voluntary carbon market, we can sell the credit outside India. Government is not going to block international voluntary carbon market credit because latest data, all the study has been done. The international voluntary carbon market expected to grow $50 to $100 billion by 2030. Any study, we can see that. Right now it's around, last year it was $2 billion. And India has 30% share, around 0.6 to $0.7 billion came to India. So market has to grow. Now that there is a latest development in VCM side, I would like to keep in the notice, which we have already mentioned to MOFCC earlier. We have more than 100 million credits right now in the country. We have raised 300 million credits so far in voluntary carbon market. And we have already retired around 170 million credits for the world. So we are also a largest VCM credit supplier to the world. So 100 million credits, whatever we have left right now. So what will happen to those credits? Because we can't sell the credit, price is not extremely high. Some credit is at the stage for only for issuance stage. Some credit are in the stage for only for registry stage. So what will happen to those credit? Because all these are investment to the private company and PSU, what we have done earlier. So what we have suggested to government that all this credit we can definitely use for meeting our NDC target. Government should, because all these credits we will get at very cheap price because internationally the price is only 0.5 to cent to $1. So why not government can buy and use it for NDC target? So government said that how they can buy, because this is a voluntary credit. How can I buy? Then I presented that in the Article 6.2, it is already mentioned that unilateral announcement for Article 6 credit is also allowed. Suppose I am the country like Singapore, Switzerland, Colombia, Kenya, Rwanda. All this country has announced that they have a VCM credits and they have labeled this VCM credit to Article 6 credit without informing UNFCC, because they said that there's nothing mentioned in UNFCC framework that Article 6 means bilateral, multilateral collaboration is not mentioned. So can Government of India can voluntarily mention some of the credit which is high quality and integrity, labeling to Article 6. And those credit can easily be utilized by any player because we can easily transfer this credit from informing UNFCC. Those credit can be used to the other country and the corporates to meet a net zero goal and their environmental targets, as well as those credit will be also called a high integrity and quality credit. So these are the possibilities are there in the market where we have already more than 100 million credits with us. So we need to find out, because all these are investment done by private sectors and PSUs. So government should really focus on these areas. And this is an opportunity for us, either meeting our NDC or helping world to achieve their goal.
So do you think that's a potential threat to the VCM market? The fact that the government may unilaterally one day announce that, like other markets and other jurisdictions, we are going to look at the high integrity credits in order to subsume them towards NDCs.
So I also want to mention that there are hundreds of carbon projects available in the world. Like right now, the Indian carbon market, we have not mentioned about methane projects, because we are very afraid in case we'll have methane projects in the Indian carbon market list, because it is directly linked to the farmers and at large. So I think VCM credit has a large future. It's a very bright future. And VCM credit is actually mobilizing private sector to take climate action much faster, because we know that 2070 is our net zero goal, but we also know that 2050 is a global net zero goal. So should we wait for 2070 or we should use VCM credit to achieve net zero goal much faster? Otherwise, our goal about Viksit Bharat is not going to be very easy to achieve. So VCM credit is definitely going to help us to achieve net zero goal much faster. Global compliance are actually extremely high. So we should also keep in mind Government of India compliance can be different but we have to obey the global compliance. Our companies are multinational in the nature. So we need to follow the global compliance where VCM credit can be very useful. And we also came to know that there is a soft loan for the companies achieving net zero goal, climate goal much faster. And also reputations is very important. Investors involvement is really important. So VCM credit is going to meet those purposes at large.
Yes, I think we'll, throw this session for the audience if there are any questions. Sure.
Thank you. Sensei Raj, brief introduction. I'm a farmer, former trade strategist, to handle about 30 traders under me. Since 2009, I've been a part of the carbon credit. In fact, in the UN, I had mentioned, which is archived, that at the time, the Ecuadorian ambassador and myself were sharing the same panel of the UN, and we said this is the biggest global scam that is ever going to be. Since 2009 to now, in the international global mandate that you said we might have to obey, I put my quote unquote, what is that international structure? Is there accountability, there's transparency in the systems, which the experts even today have a larger question in that. Leaving that aside, what you mentioned also about the compliance and also the VCMs is a great market tool. It's a great trigger. I have no opinion about it, but to say, absolutely go ahead with it. I've just come back from the Northeast talking to various FPOs and chairmen of the FPOs. The structure that you suggested how to roll out would be falling with the FPOs. If we can, there's already a structure in the country for the Viksit Bharat. If we can back on the same structure, just like the NEP, the National Education Policy, which some states have literally torn it apart. I hope they don't do that with the carbon credits. That will be a way to go for the country. But as you rightly pointed out, what is the integrity of the carbon credits Dr. Sharma had mentioned, which is where we fall back upon. Now, this is where we go back to the international structure. What is the actual integrity of it? I come from a trading background. My bread and butter came from trading. If you know the MCMI, Major Commodity Market Index, and even today, where do we stand? If you talk about the government's leading it, if you go back to the definition of the carbon credits, it says it's a market mechanism. It's not a government mechanism. So it's time to ask ourselves, both internationally and within the country, as what is this mechanism? I think Mr. Sharma, the tax expert, would play a vital role in this, as to say, what is that market maker should be? Who is the market maker? Is it the government or the plain market? Sir ji, hum farmer hai. I can tell you, show you what are the pains and also the opportunities if the farmers don't use energy. There is a correlation between the farmer and energy. So rightfully so, it should be the energy, but not the electricity board or electricity, which is the stakeholders building the cat today in the country. So there has to be a mechanism or a framework in which we need to play, number one. Number two, we have the ability from this country to sequester 33% or more of the world's carbon. In one day, 1 billion trees were planted. If you go back to the mangrove credits at $50 to $100 or even more, actually, I have also played a key role in a pricing mechanism of this. It could go a lot more. Fruit-bearing trees is the key. That's the word. That's not mango alone. But if we start planting trees, which we could, in one day, 1 billion trees were planted. Don't ask how many are still surviving. That's a different question altogether. But can we get our act together? It's not the government. Government is one small component in it when it comes to regulatory mechanism. It is the people, the society, the stakeholders, which are the key to take this forward and to have the benefits come back to the country. And no, sir, I beg to differ. The international framework will not dictate us how we need to. I think I was in key role to play in throwing out the FAO and putting some recommendations in this very building last year. So I think we should grow a backbone. We do have the talent. We do have the expertise. I think the key word we're looking at is, can this country grow a backbone to stand up? Thank you.
So is that a comment or there was a question there? Are you asking somebody?
I think there were a lot of questions in. If you could dissect it. Thank you.
I will be speaking on the integrity first, how we see the integrity of the carbon credit. Basically, what we write in the document, it should be exactly on the ground. And there is a role of the GIS and remote sensing technology nowadays. If you have the KML file, then you can see anywhere from the world that for the last 10 years what was there, and at present what is there. So that is very important aspect of the integrity, number one. And if integrity is not there, then credit will not be issued, number one. Number two, you have asked regarding that government does not have, but I again back to differ from that part. Market, in market creation, government regulations, why people is why you pay income tax? Because there is a regulation. Why the CSR funds is being spent by the companies? Because there is a company act compulsory. So that is why I am saying that that has also to be made mandatory for the corporate to be those who have taken carbon neutrality target, that offsetting through some percentage of their emissions target, but through NBS, so that on a larger side, the benefit should go to the farmer, benefit should go to the poorest of the poor who are living in and around forest. So the likewise, so two points I have covered. Rest I will request Rohit to see that.
So I'll just add about the integrity part in the VCM market. So right now in the VCM market, a lot of questions has been raised about the quality integrity globally. The price of Red Plus project has declined drastically. And so globally, there's a body formed called VCMAI and ICVCM. VCMAI is leveling the buyers and ICVCM is leveling the project developers. And there's a CCP leveling is also there. So now whatever credit is going to generate by voluntary carbon market, they need to be a CCP leveling. In case the CCP leveling is there, the project is qualified for high quality and integrity. So that kind of development is happening because this was much needed earlier. And the similar questions has been raised by multiple projects around the world. So CCP leveling is actually measuring that who is the project carbon credit buyer, what is the profile of the company. CCP leveling is also promoting the blockchain, that where the credit has been generated and how what are the embedded carbon happen in between. So that is another areas which is we are not taught yet, but there is a certain certification program which is called ISCC certification program, which also talks about the value chain emission tracking. Suppose I'm doing a plastic recycling in India and I'm importing plastic from US. So there's a large emission is happening in shipping. And finally, I do the plastic recycling and I say that I need a EPR certificate. So this is not going to be viable. Suppose Singapore is selling the SAF fuel, aviation fuel, and taking the raw material from India. So that SAF fuel, if a line company is buying those SAF fuel, they're saying what is the emission has been done for producing that SAF fuel. So that kind of transparency integrities are there. So market is not going to be very easy now. That suppose I'm selling the credit, what is the embedded carbon happen on those credit? The people is asking it. Suppose I'm doing a forestation, what are the emission happen for making this forest alive? So those kind of credit emissions are going to be deducted from what kind of credit we are going to generate.
There is component of leakage and the risk.
Leakage, yeah.
So permanence risk assessment, 15%.
Energy side is easy. Energy side is easy. We are saying 0.9, 0.85. But other projects, it's very. And finally, I also want to emphasize that suppose we talk about the carbon credit, we should also focus about co-benefits at large. Because a recent study has been done, one of the leading organizations, that carbon market is coming with $26 trillion opportunities for us. It's not only expense. So why the $26 trillion opportunities are there? Because carbon market is also going to improve the health condition of the citizen. Carbon market is also helping to reduce the climate changes concerns. So all these benefits we should also measure at large. This is very important for government and other institutions to also understand that this is not only carbon credit buying and trading. This is at large benefiting 8 to 9 SDG goals. But we have to measure what is the benefit in terms of numbers, so that government could also focus and emphasize to work in this space much larger. It is not just trading. It is more than that, what we are doing. Yeah. I'll just add the last point that we are also doing a program on livestock and dairy sector decarbonization because India has around 25% dairy production and livestock. Here, the major topic is that is it not like our animals are major concern because we have more than 50% cattle in the world. So they're not the culprit for actual emission. They're only culprit for 20% emission. But 80% emission is happening from cold storage, supply chain, packaging. So we should understand that where is the actual concerns are there. It's not like that they are the real culprits because our economy is based on that. So we are focusing more about in this sector so that we can actually fix up the right problem and right concern. Yeah.
I'm Yogini from Carbon Removal India Alliance, which is the industry association of uh, engineered carbon removal solutions technologies. I just had a question that, since the morning we've been thinking, looking at very complex issues, such as say, that we are talking about multiple registries, we are talking about multiple methodologies. Then there was also a talk of regionalization of, methodologies and therefore registries also. That's what I understood. Uh, and then when we talk about ease of doing business and also carbon markets, do we look at regulation only from the perspective of the project proponent, or also look at it from the ease of doing business for the developers and for the farmers who are sort of creating those credits in some sense? And when we look at the regulatory landscape, which sort of takes into account all of these players, what does that look like? Also take into account the co-benefits like you were mentioning, Rohit.
That. So now, the good news is that we are coming with Article 6 market. So Article 6 market, there are two market, Article 6.2 and 6.4. So that all your questions is going to be solved because there will be high integrity, high quality, one global framework. So suppose I'm doing a project in India, it is as values as doing a project in Africa. So right now, the carbon credit price in Africa is much higher than carbon credit price in India. Because Article 6 credit, we can export from India to any part of the world, and we can also buy from Africa to India. So that is going to give us a good pricing and actually balancing out the carbon pricing. Right now, voluntary carbon market, we are able to sell the credit in very less price because they are not Article 6 labeling credit. The chances of duplication or the chances of double counting is extremely high. So I think all these are concerns. And after 9 years, Article 6 has finalized, finally in the COP Azerbaijan. So I'm thinking that carbon market is going to increase very rapid growth and a lot of clarity will be going to happen. And we are going to find out all the solutions what we have faced earlier. So I think expect a 10x growth in coming 5 to 7 years time. Yeah.
Right. I think just to add to what Rohit has said, to my mind, a legal and regulatory framework, once it is established and brought into place and it's complete, has to be robust in the sense that it has to uh, exercise and be extended to each of the stakeholders within the carbon market. And that would mean the farmers, that would include the project proponents, buyers, sellers. So we're looking at a framework which would, while being market driven, may actually talk about prices. It would talk about inter se rights between the farmers and the project proponent, and to some extent standardize some of these provisions and requirements. So while I think we are some way away, some years away, I think there's, as Rohit has mentioned, 5 to 7 years, but I think that is what it it should look like once it is completely established and in place.
Niti, one point I like to mention for Rohit also in particular because he is involved in with the government, and I suggested government officials also same thing. We all are talking that agroforestry and farmers should be also be involved in that. And do you, somebody has think that how much money is involved in the project development, validation, verification, issuance of the credit? There is a fee for the issuance of the credit also. मैं आपको बताता हूँ 6 से 7 करोड़ रुपए लगता है एक प्रोजेक्ट के अंदर. Until unless that project is economically viable, so that how many farmers hectare, minimum 10 to 15,000 hectare of the plantation is needed. And in this country, more than 86% farmers are marginal and small farmers. So that we are implementing, we are bundling 5,000, 10,000 farmers together, and bundling 5,000, 10,000 farmers together and preparing a single project is not a joke. And you have to have 10,000 KML files. You have to check 10,000 KML files and together see the how the what is the plantation scenario for the last 10 years, what is the existing 10 years. This is a very tedious. We are implementing 40 projects. We know that what are the challenges. So in a statement saying that farmers should be benefited and farmer, maybe it for 100 hectare, for many farmers called us that we have 100 hectare plantation. We can't prepare project for you because you can't bear the cost. So at least minimum 10 to 15,000, 15 to 20,000, it all depending upon the what kind of the plantation is. And again, I'm just mentioning it that there is a one term, Rohit might be knowing, long-term average. And credits are being drastically low. If your rotation cycle is 5 years or 6 years or 7 years, if your rotation cycle of the tree is 30 years or 40 years, your credits will be very, very high. So in a smaller area also, but in a larger area, credits will be very, very low. So these are the all nitty-gritties. These are all the challenges is being faced when you prepare the project, you develop the project technically, so that it is not that in one go you go and prepare, so that KML file preparation of the 10,000 farmer or 15,000 farmer or 6,000, 5,000 farmer is very, very tedious. So that I wanted to explain what is our experience and share that experience with you all, that it's not that simple in saying that prepare the project and exactly implementing the project to the success of the issuance of the credit. So that is why success rate of the projects are very, very low as far as issuance of the credit. Sale and purchases come after that once issued.
Hello. Sorry. I'm Bhagwan Patel from ASA. Hello, everyone. My question is related to green basing. Means there is a very famous bird in the market, green basing. So, means also people are doing reporting false data or evaluating their work more than they are actually doing. So, how means what is the procedure or how government addressing these issues?
Right. So you want to address greenwashing regulations, which are, I don't know. Okay. So there are greenwashing regulations which are there in place. They are not specifically extending to carbon credits and do not elaborate much. But, and this is from the Consumer Protection Authority of India. So while I think by and large, the prevalent view is that the VCM would fall within the ambit of the greenwashing regulations. So there are penalties and there are provisions in place already. But to what extent it's being enforced and exercised, that remains to be seen. It is still fairly nascent, it's recent, and again, the jurisprudence hasn't evolved much.
I'll also add one point that when you want to be net zero, so there's a certain path you have to go. So when you want to be net zero, first of all, you need to find out where all emission reduction you should do, what kind of areas you can do that. Find out where all the large emissions are happening, scope 1, 2, and 3. And after knowing the emission, what are the emission reduction can happen by your organization itself. Suppose you have done 80% emission reduction by yourself by changing technology or processes. Rest 20% emission, what you are doing, you have to go for offset projects, removal projects or sequestration projects. So the chances for greenwashing is very less now because market is going to be very transparent. Steps are well defined. And after that, even if you're doing greenwashing, as I mentioned that in the voluntary carbon market, there's a body called VCMAI. They actually give the buyers ranking. So are you buying credit? So what is the gold, platinum, and silver ranking? Are you doing a greenwashing or not? They properly measure it. And finally, you have also the greenwashing rules and regulations. So you can't escape now for greenwashing. Yeah.
Any other questions from the audience?
Because I request organizers to send the proceedings to the Ministry of Environment, Forest and Climate Change also. And Rohit might be knowing that we are experiencing that definition given of, there is no definition exists of the forest in India as of now, but only one definition given to the UNFCCC by of the forest by the Government of India. And I was instrumental then. I was in the Government of India that time when this definition was communicated. So now I feel as a project developer, as a technical person, that this definition should be reviewed. If we would like to give advantage to the forest dependent communities more and to the farmers. And the Forest Survey of India has given three definition: open forest, moderately dense forest, and dense forest. So 0 to 40% is a open forest. Open forest means degraded forest. And we have to plant degraded forest. So at present, the definition given to the UNFCCC is 15% canopy cover. So that whatever 15% below 15% canopy cover, that is non-forest, and what is more than 15% canopy cover, whether it is a private farm or whether it is a orchard, it is a forest. So that you cannot plant as per the carbon credit issuance forest land. You have to plant non-forest. So that if the definition given reviewed by the Government of India and communicated to the UNFCCC that this is a national definition of the forest, maybe 30%. Most of the farmers, most of the forests and forest dependent communities will be more benefited. This we have learned out of our 10 years work in the field of the carbon credit. So that this piece of advice must be given to the, it is up to the government. And whenever the Rohit participate in different meetings, so they can also suggest that not exactly 40%, but at least 25-30%, definitely large part of the farmers and the forest dependent community will be benefited, and we can prepare more carbon finance project and we can prove additionality very easily on that particular aspect.
To Mr. Rohit as well as Mr. Sharma, uh, that in most of the cases, I find that in most of the states, they do not recognize that carbon projects can be taken up with private investments in IFR, CFR lands. So that's something which is, and there are huge chunks of lands which are actually given to the people who are traditionally the users of that particular land. But then the investment, any further investments are very low. So as such, whatever you are doing it. There is no further investment going on for developing this kind of land, helping people to actually build forest, etc. So that's where, one way could be also that, we can actually, work with very large number of farmers and help them develop forest. If this thing can also be open to private investments and say that, yes, the against the private investments, carbon credits can be generated and the investor can get it. But on the other hand, the local communities can get good livelihood, restore their, degraded lands, improve their hydrology, so on and so forth. So that's something which I thought that, I share with you.
I will just share a small case study. So recently we have, last year we have listed one project in Nagaland. So that is in the Perumal district and where large, near to Dimapur, where large number of deforestations are happening. And the communities are using those forests for livelihood. And so what happened that in the northeastern state, few of state, there's Article 307 is there. The forest right belongs to community. So where there's a forest right doesn't belong to the government Campa fund is not there. So additionality is not a concern there. But we have to take approval from each community's area. So we have taken approval from 10 to 12 communities areas. The actual land bank was 6,000 to 7,000 hectare. And after that, we have to plug in the activities. So idea is that these opportunities are well existing in the northeastern part.
Northeastern part, I know, sir.
Yeah.
The other part is about that, Odisha, Madhya Pradesh, Chhattisgarh. You have large chunks of lands already settled in the name of the local communities, either through CFR or IFR.
We just, so would like to address?
Yes.
Yeah, please.
Uh, Recently, I was discussing with Director General of Forest and Special Secretary to the Ministry of Environment and Forest. And many PSUs are particularly, I can name the PSU also, Indian oil companies approaching them. Then they want to plant trees. As I mentioned, that where is the land, either with the farmer or the forest. So they want to treat the tree plantation on the degraded forest land. And government is thinking, and then they can obtain the green credit as well as carbon credit out of that. And DG has requested me also that kindly suggest them that how they can get the carbon credits and they can offset their emissions. There are two kind of the carbon credits. Once the corporate wants to offset the emissions, very easily in 2 years, we can get it issued by any of the carbon registry. But if you like to sell the carbon credits, then you have to have very, very reliable standards for that so that you can fetch a better price. So what is your objective? Objective is offsetting emissions. Okay, you can write in your books that kind of the emissions, and we have offset that kind that will be done. And we have suggested on these two solutions to IU in our company. I'm coming to your point. You are might be pointing out towards the implementation of the community forest rights and individual rights under the Forest Right Act have been assigned to the many and large more, and land is not productive and where the investment can be done and tree plantation activities. Even state governments are thinking in the direction. Of course, decision has not been made, and we are part of the Maharashtra state government. We are in discussion with the Maharashtra state. We are in discussion with the Ministry of Environment and Forest. But of course, the decision has to be taken. I don't feel that there is any harm taking this decision for seeking private investment for the tree plantation. As Rohit has also mentioned that there is a cabinet decision of the Madhya Pradesh government also 2 years back or 2.5 years back, 3 years back, that investment will be there and benefits, direct benefits will be of communities, or indirect benefit means carbon credits or carbon sequestration aspect will be of the corporate. So this mechanism is, and all you, me, and all can help the government. Ultimately, political leadership has to be influenced. Political leadership has to be convinced regarding that. Only bureaucrat cannot take decisions. Only once the political will be on this particular direction, then you see the decision will be taken in a month or 15 days or 20 days or likewise. And if this decision comes from the highest office, then decision can be taken in 5 days or 6 days or 10 days likewise. So this is a very good idea, very good concept, that investment is required, private investment required. It will be a win-win situation for the communities, for the government, or for the corporate to offset their emissions.
I've also added one more thing when sir is saying to the forest department. We have also mentioned that we have a large number of forest waste every year. And due to them, there is a forest fire. Chances are there. So we requested government to give the forest waste. We have invested to do the biochar project. And biochar grade price is $150 to $300. So 3 years break even. And also give the employment to the community at large. So those suggestions and recommendations has been done several times. There need to be some strong steps are required and willingness, because everything is going to help to community at large and helping India's backbone for decarbonization.
Just to bring the scale of magnitude to what question you asked, 17% of our country's land is wasteland. 17%. Think about it. We have only about 17%. Well, I'm quoting actual data. I was there yesterday discussing this. The biofuel economy itself is about 22 lakh crores, which goes back to the farmers as per the rollout of the plan. Even if 50% is to hit back to the farmers, because we are discussing small farmers and marginalized farmers. You're looking at about 10 lakh crores getting back to the farmers. But then that is only the tip of the iceberg in the country. If you look at the fruit bearing trees, if we plant and create tree banks, which we are not even discussed anywhere. Now you can imagine, I leave the sentence unfinished. I think we're all intelligent people. We could finish the sentence and connect the dots. That is just the beginning of the scale of the economies in the carbon credit framework within the global context and within the country itself. I think Madam Chair wants to add something to that.
Oh, I think that's useful information. I think it would be interesting to see if the green credit program, it purports to aggregate land on a government platform. If some of that can be utilized and relied upon by the private market, I think the possibility and potential is immense. And that may also help alleviate some of the issues around land title, and because that would be flowing from a government platform. So I think that how this can really emerge, I think that we'll hopefully see.
Why don't we form a stakeholder committee, or as a result of this, instead of just ending on a note or getting a recommendation to the government and then enforce it, or ask the government to actually take steps and then take it forward?
That's a very useful suggestion. I think the stakeholders present here, they carry and bring enough weight and gravity.
I'll be happy to get my team to write a public policy note, or to go to the government or put a structure, project plan, which I did for a living for a very long time. I am the founder of Vision India 2032, which is a capacity development / nation building movement. It's not an NGO, it's a movement. I'll be happy to take the first step for the rollout.
The Cognisphere Solutions Limited. Thanks for coming forward. Niti, you want to? Okay, no, you just include that.
Okay. So that was a very useful, informative session. As promised, we definitely raised a lot of questions, addressed a lot of questions. We may not necessarily have all the solutions today, but a lot of interesting ideas, and the road ahead for regulatory and legal framework to be elaborated upon and clarified. And I think some useful suggestions from the panelists, really useful suggestions on the policy changes that are needed. So thank you very much, the panelists and Cognisphere, for arranging the dialogue.
Back to felicitate the
Thank you.
panel, yeah. You want to stand, sir? Come back. Niti could also come back.
Niti? Thank you. अभी आइए इधर तो सामने ही
Great. We finished at a very good time. But as we were mentioning earlier, this is not necessarily the end, but could well be the beginning. And as I promised earlier, I think I am hopeful that all panelist speakers and the guests would be open to conversations post the event, and they will allow access through mail or other channels to keep the conversations going. I think because from my point of view, I was talking about my daily crossword, and I think the clues that I have got to solve this crossword are a little cryptic. I don't think it's one of the simple clues which I usually do. This is a little cryptic, and I think would require some more conversations. I understand that the areas and sector that we are talking about is evolving in its early days. So it'll need a lot more conversation till the stage when a gentleman there said, if I can supply some carbon sequestration opportunities, and there is a gentleman here who wants to buy those, then how do we make it simple for them? I think it's all for us intermediaries, as you like to call experts, to help this process and simplify it, so that, because the fact that nature-based solutions is a great answer and opportunity for this country to address climate issues is well known. So I think it's only for all of us to help and make this happen and make it much more simpler. So thank you very much for joining us today, and let's keep the conversation going. Thank you so much. You can join us for tea and some conversations over tea also, please.